The $3 million super tax. Do we still need to be concerned? Hi, everyone, and welcome to Ainslie Insights, brought to you by ainslie.com.au, the home of Ainslie Bullion, Ainslie Crypto, Ainslie Wealth, and the Gold and Silver Standard. Be sure to have a look. Today, we welcome back Katrina, who's been digging into this topic around the super tax. It was something that I had been hoping had sort of died with the election, and I know the bill had sort of expired. So I thought, oh, okay, we're probably in the clear. Then Katrina's come along and told me, I wouldn't be so confident on that. Lots to discuss today. How are you going today, Katrina?
Yeah, I'm very well, thanks, Chris. How are you going?
Yeah, good. Well, I was going better till I was
Right.
more worried about this
Yeah.
again. Not
Yes.
that I have that. I think the number was something in the order of 80,000 people it would impact now. But
Yep.
when you look down the track, it's really quite a concern. So let's start us off by talking about
Mm,
what it is.
mm,
What's the background here? We hear the number $3 million super tax. People go, well, that doesn't really impact me. I don't have $3 million in my super.
yep.
But what is it? What are the longer term implications here?
Yeah, so we're looking at Division 296, and it's basically the Anthony Albanese Labor government introduced this back in 2023, and it was a tax reform to increase the tax on earnings from 15% all the way up to 30%. So an extra 15% for superannuation balances above $3 million beginning on the 1st of July 2025. Basically, they tried to pass this through Parliament. So it did go through the House of Representatives, which is the lower house in the federal Parliament. However, it did not pass the Senate. It was actually blocked by three independent senators, and the reason being they blocked it was for the fact that in the legislation they were talking about unrealised gains and obviously realised gains, but unrealised gains was a new addition to the legislation, and a lot of people went, how are we actually going to calculate this? So it was blocked by three senators, and the Greens had said that they weren't going to support the legislation unless it was lowered to a $2 million threshold. So, obviously, since the election has passed, they have said that they are now going to reintroduce this legislation. And as the Greens hold the balance of power at the moment, there will obviously be a bit of give and take with them. But this is set to pass through the Senate.
I My big concern around this when I'd first heard about it a while ago
Mm,
now, and then was why I was breathing a sigh of relief when it looked like it wasn't going to get through.
yeah.
Was it feels like it's very ill conceived, particularly around the idea of what happens to people who have assets in their super that aren't necessarily easy to sell down. So let's say you've got
Mm,
property, for example, and your property goes up in value.
mm,
You raise the point. How do you even figure that out, for starters, of what it's worth on that given at that given point in time? But also, you end up with a big super bill. How are you going to? Do you have to sell the whole property? How's that even going to work? What are some of the
mm.
key factors of this as proposed? How it would work?
Yeah, that's a great point, Chris. There are a lot of implications that would come with the passing of this legislation, obviously including the higher tax rate at 30%, which was previously 15%. Whilst only they say 80,000 people have a total of more than $3 million in their superannuation, $3 million whilst you're working all your life, it actually doesn't seem too far away. If you've got them in assets that are growing or at a 6%, annual return rate each year, $3 million might sound like a lot right now, but, in a couple of years' time, it might not be only 80,000 people being affected by this. Secondly, the unrealised gains. How are we going to actually calculate that? A lot of people, like you said, in their self-managed super fund do have property, farms, different assets that they can't just liquidate and sell. How are they going to actually look at the administrative side of that? How are they going to then propose that? And also, what are the implications going to look like? How much money is going to come from these unrealized gains that these people need to pull out of their super or that sort of thing just to pay that tax bill. So that's a big one.
Do you think, like, a lot of conversations we have, and you probably have even more of these than I do with clients of Ainslie who come in and are buying gold and silver. They're
Mm.
often buying gold and silver because they go, well, I'd rather be buying an asset. Like some are buying it in their super, which makes a lot
Yep.
of sense as well. But others are saying, I'd rather buy an asset that I'm holding outside of my super because I just don't trust that the rules will be the same down the track
Yeah.
when it comes to time for me to be able to take advantage of this. And
Mm.
is that what we're kind of seeing here? Like, is this everyone's worst fear that, okay, we saved under one regime and these were the
Mm.
rules under that, that we thought, well, we will do that. We'll put that extra money aside, even though we can't touch it now. It's got a better tax treatment, so we'll put it there. That's what we're all told to do. And
Mm.
then the rules change because, like you said, what is $3 million worth
Yep.
in 20 years if you're 20 years away from retirement? Like $3 million
Mm.
might be what $1 million is today. And $1 million does not get you that far if you're relying on that for retirement for 20 plus years.
Yeah, that's right. Yeah, I think a lot of people are now, especially with this coming out, particularly after the election, it's just a lack of confidence. Once again, we're seeing more and more people moving towards self-managed super funds because they have that flexibility and freedom to then choose what investments. Decisions they want to make with their superannuation money for their retirement. With something like this, which is an extra 15%, including self managed super funds, it just takes away confidence in general for people wanting to salary sacrifice into their super. I did read today an article by the Financial Review, and there were a couple of independent auditors and also accountants that were actually saying personally, they've just started investing outside of superannuation. Like you said, the legislation, policies, and regulations are always ever changing, and it's not an environment that is secure and safe for them to invest. It's just changing all the time.
I want to give it a fair chance. So,
Hmm.
are there some advantages here?
Yeah. Yep.
Because there's always two sides. Obviously, the people
Hmm.
introducing this legislation aren't doing it purely for the reasons of like trying to create problems for people down the track. They
Hmm.
obviously think there are significant benefits that outweigh the costs.
Yep.
What's that argument?
I mean, there are definitely, they have said this is to create a fair system in terms of taxation and also taxing those people that are over $3 million. So, you could argue that there are a large number of Australians that are using superannuation as a wealth building asset, and they're the people that, the government are essentially targeting, I guess you could say, with this legislation to bring down, I guess, their tax advantages and give people more of a fair go. They did say though that the total projected value that they will get out of this tax is going to be about $2.3 billion. They did say that they would then put this towards public services and things like that for the community, so there would be less pressure on the broader community for income tax and things like that. What they'll spend it on, I'm not too sure, and I guess we will find out. But I think the large portion of it, even if the money does go to public services and hospitals and things like that, but that we do need, there'll be a large portion of people still, as a result of this ever changing sort of superannuation regulation rules and that sort of thing, there'll be a large portion of people that just won't want a salary sacrifice. Even if it's going to the right place, they just will lose confidence in general.
Yeah, and that seems very counterproductive. I mean, you mentioned, and I was trying to look at the positive of that there, but even when
Yeah,
you're
me too.
saying the positive, even when you're sort of putting that across, you're saying
Yeah.
like it's not good for people
Mm.
who are treating it as a savings mechanism
Yeah.
and building wealth. But that was kind of how they were sold it, right? Like that was the sales pitch was put
Yeah.
it in. It's a savings mechanism. You're supposed to be
Yeah.
building wealth. And what does this ultimately do? I think my biggest concern for this is what does it ultimately do for the pension down the track? Because if you make
Yeah.
it so that people, I know there's a compulsory aspect,
Yes,
but if
that's
you've
right.
got people who, for whatever reason, whether, particularly women, I think this is going to have a big impact on women who might not, be outside of the workforce for a period of time if they're raising children or for whatever reason,
Mm,
they don't have that larger super balance. But if they stop making those additional contributions because of the trust issue going, well, okay, I've seen people who were using that as a saving mechanism and ended up sort of worse off because they have to pay that big tax bill and they
yeah.
have to deal with the headache of that every year.
Mm.
It could be net negative and encourage a whole lot of people to be reliant on the pension system because they just put the absolute minimum amount into their super.
Yeah, and I definitely agree with you, and I feel that sentiment too, especially in the office as well. I do have conversations with people that are coming in that also didn't know about this. We were just having general conversations about, bullion and super funds, and some people were saying, "Oh, it's not really going to affect me because I'm 30." The thing is that, it might not affect you right now, but it will affect you. And that, 1 million, or if even, that can easily become three if you have the right, if you've got the right tools and everything behind you, and also you've got the time. It might target at the moment those people with high super balances. It will feel as though it will become a middle income tax extra burden. So that's what I'm really worried about.
Yeah. And obviously, tax is always controversial and always an issue because someone's got to pay for others. But
Yeah.
I think for me, it's that broken promise that's the bigger concern because I was never, like personally, I was never that keen on super. I've become more keen on it recently over
Mm,
recent years going, oh, okay, it does make sense. Maybe I should put a bit more away into there because there are those tax advantages. But
mm,
why would you give up holding something
mm.
personally if the rules are going to keep changing? You'd rather just hold it
Yeah.
personally if you're going to end up paying the same tax anyway.
Yeah, and I feel like the goalposts do change. I mean, we were told that it is 3 million. Obviously, the Greens now hold the balance of power in the Senate. They're wanting 2 million. What's to say that it's not going to go down to 1.5? That's just something to think about too. So, I mean, it is ever changing. So it's definitely something to watch, but it's something that is creeping back around to us, and it's definitely not in, it's definitely coming back to to the Senate.
Haunt.
Yeah, yeah,
Well, thank you for your deep dive on that. I wasn't paying anywhere near enough attention to that issue. I genuinely thought the bill had sort of died and it wasn't um, coming back. I thought they weren't really
me
pushing it.
too.
Sounds of it, that is not the case. So we'll keep watching this space. I mean, anything can happen. It's not a done deal yet, but
That's right.
it's certainly not looking overly encouraging that it won't go through if you
Yeah.
take that view on it. Others will probably be very excited about the prospect of it coming through. So it depends where you sit on that political spectrum, I suppose. But thank you for your deep dive on it. Really appreciate the insight.
No worries. Thank you, Chris. Thanks for having me on.
Thanks everyone for watching. We'll chat again soon.